Hi everyone, my name is Stephen Stewart. I'm the CEO of Power Ore, and this presentation is about our recently announced Opemiska Copper Mine Complex presentation. We're very excited about this transaction, and I'm going to go through it in more details. As I believe that when we made the announcement, the market was obviously asleep. It's tax loss selling season, and everybody had gone home for the season. And more importantly, nobody realizes what the Opemiska is, one, and two, what our plans for. So that's what this whole talk is designed to do. So again, it's Power Ore. Our symbol is PORE on the Toronto Venture Exchange. We're a brand new company, and we are geared towards copper, cobalt, and nickel, and we have 3 assets, but this is specifically about the Opemiska. So let's get started. So the first slide we have, as always, is going to be the ubiquitous forward-looking statement. What this says is that this is a risky business that we are in, the exploration and development side. We do our best here at Power Ore to mitigate those risks, and we do so by buying advanced stage projects that have a lot of work done on them in the past that we can reevaluate, reinterpret, and redevelop in the context of reworking the situation. And I'll explain how we're doing that specifically on the Opemiska going forward. So I guess the first question is, why did we do this deal? Why the Opemiska? When we evaluate any deal, it's always about capital allocation. That's our job as managers, is to evaluate the cost, the risk, the value, and the potential return of any particular transaction we go after. When we talk about cost, we think we've financed this very intelligently. It gives us time, which is the most important thing. When you're talking about cost of capital, we have 3.5 years to fully complete the financing on this. Additionally, 66% of the cash towards the acquisition cost goes directly into the ground. That means we're investing into this project as we earn ownership in it. Value, obviously, we think the value time is a very unique time in the resource and the mining space right now. We have been out of favor for a long time. It's a cyclical business, and we think it's a great time to buy, particularly copper. I'll get more into details about that. And then that all relates to the final point, is potential return. Obviously, we're in this to make money for our shareholders, pure and simple. We think that this is a very accretive transaction, and Power Ore itself is a very tightly held with a very tight capital structure. So that's the broad strokes. More detailed technical advantage of this project is that the Opemiska is a very advanced stage project. As I will tell you, it was Falconbridge's flagship copper mine in Canada for many, many years. The Opemiska itself was 2 high-grade underground mines. The average grade was 2.4% copper with about 1/3 of a gram gold credit coming out of there. So a very high-grade situation. It's near surface, and our vision is to turn those 2 high-grade mines, underground mines, into an open pit. And again, I'm going to talk more about that. Second, why we like this is it has a huge amount of data. Falconbridge were excellent operators, best in class during their era, and they left tons of maps, sections, assays, drill holes, etc. All of that data is in hard copy. The vendor is a group called Exin. They've owned this for about 20 years, and they, in the last 10 or so years, in combination with some of our team, have been digitizing this data, which means we can look at it in 3D. We can understand exactly what the in situ resources look like, its orientation, its grade, its dip, what has been extracted, what is obviously most importantly, what is left, and how that will look in the context of an open pit. So the amount of data here is a veritable gold mine. Third is the infrastructure. This project, once an economic ore body is delineated, and I believe it will be in the future, we have access to significant infrastructure on site. There is the Canadian National Railroad runs right to site. There's a paved highway. There's a power line that runs right to the property. There's an airport 20 kilometers away, and it's just next door to the Chibougamau camp, which is a very well-known, established camp. This whole area is a very copper gold rich area, so we're happy to be there. The fourth thing is the copper gold. We already mentioned that, but there's also the potential for cobalt in this project. When Falconbridge was mining it back in the 90s, cobalt was not really a going concern, if you will. There's many deposits that are very similar in terms of geological style, high-grade copper gold vein systems in our area that have had recent drilling and done multi-elements and had cobalt. So we think there's an opportunity for us to go back at the very early stage, resample some of the core that's been done and do multi-elements and find out if there is, in fact, cobalt associated with the copper. This is a copper play, but any additional metals that have become an economic situation will be evaluated. Fifth, this is in Quebec. I stress Quebec is our personal favorite jurisdiction in the world. We've done a lot of business in Ontario, and it's right at the top. But Quebec really is in a class of its own in terms of permitting, community relations, First Nations relations, the flow-through system for the province. There are a number of government-mandated funds, financial funds that invest directly into Quebec-focused projects. So it's the cost of capital, we believe, is lower there. And it also, at the end of the day, the rocks have to speak for themselves, and Quebec is let's call it half of the Abitibi, and it's an excellent place to do business. So, and the final thing is we have a clear development plan in terms of what we want to do. We see the steps towards ultimate delineating an economic ore body and getting towards a production decision. We see that very clearly. This is not an exploration play, so that's something I'll just mention. This is about acquiring an old mine and reinterpreting it. There are a lot of examples which I'll get to, but the typical exploration plays, you go and you have to make the 1 in 10,000 discovery, and then you're lucky to make that. The stock price shoots up. Then you've got about 10, 20, 30, maybe $100 million worth of drilling to go delineate that ore body. And then you have to put economics around it. But this is a very different type of situation. This is not an exploration and a discovery play. As we know, the ore body has been already discovered. This is a reinterpretation. All of that drilling, or I shouldn't say all of it, but a good deal of that drilling has already been done, and it lives in the form of that database. We certainly intend to do more drilling in terms of drilling the crown pillar, which I'll talk about. Also some exploration drilling, some upside drilling, certainly, but the bulk of this mineralization is already known, and that's a huge cost savings when you look at our company market cap relative to what we're acquiring. I think it's very important consideration. And how did we do this deal? How did we get such a great project? Power Ore is a small company. We're a new company. Well, it all comes down to partnerships and trust and relationships. I think we got a great deal because we approached, well, first we knew the vendors. It's a private family at a Quebec private company. Our technical guys have known the family for many years, and as I mentioned, assisted in digitizing the database. And we worked with them over the last 6 months to get to this point. And I think our approach was always about not buying this thing for cash, but aligning our interests with this private company and bringing them in as a shareholder in Power Ore and developing this project alongside with them. And so I think they have a lot of trust in us. They're a very technical-oriented family, mining engineers and geophysicists. We also have that skill set, but we also have the capital markets and the project management. So basically, we become a team. We're moving this thing forward together, and it's going to be a win-win situation. So just quickly, we borrowed this slide from Ore Finders, which is sort of our sister company, and this is about a new interpretation of old mines. And you'll have to take this slide with a grain of salt because this is gold companies, but the principle remains the same. Now, you look through Barrick and Goldstrike, Goldcorp, Red Lake, Osisko, Malartic, Detour, et cetera, these are all similar types of situation to Power Ore and Opemiska, where they took an old operating mine and they looked at it in a new context and they became huge successes. We believe that on a risk-return basis, you're far better off using this business model than going out there in the wilderness and trying to find a new ore body. Can you find a new ore body in a greenfield? Sure you can, but the risks are completely different. This is a much less riskier type of situation, and the outcomes could be huge. So that's why we put this slide up, and that's why we like our particular strategy, particularly in an area that's chock full of these types of situations. So the background on the Opemiska itself, as I mentioned, it was Falconbridge's flagship mine between 1953 to 1991. It's two mines, the Springer and the Perry. They had lots of gold. Over 1 billion pounds of copper came out of this thing at exceptionally high grades. Recently, there was some work done by RPA. RPA is a very well-known and respected engineering and economic firm here in Toronto, and they delineated what's called exploration targets, which comes out with 16 to 33 million short tons at at over the target range between 1% and 1.4% copper, and nearly a third to 2/3 a gram gold. Now, that's just on the Springer. There's also the potential on the Perry, and there's also potential on the underground. We think we can delineate an underground ore body here, which would be ramped from the pit, and you can see that's got between 3 and 11 million tons at 1.5 to 2.5% copper. That's a lot. That's a fairly substantial project with, certainly very good grades with gold credits. Now, that's an exploration target. That's not a 43-101 resource. And the reason that they did not come out with that is largely because of the digital database. It had not been finalized. It had not been vetted. That is something that we are in the process of doing right now. So we're going through the database line by line, vetting it, validating it, cleaning the data. And, we hope to come out with a resource calculation in the not too distant future. I don't know what it's going to look like, but that's sort of the guideline that RPA came out with. And if we could come out with, and those are 3 separate resources, collectively, if we could come out with a resource and a global resource such as that, I think, this would be a real big success for Power Ore. What the digital database is based on is over 14,000 drill holes. That's over 800,000 meters of drilling, lots of assays. All this is just data points. And at the end of the day, what we're trying to do is define what was taken out and what's left over. This is a high-grade mine. There was a high-grade underground mine, and they were mining veins. And we believe there's still lots of veins left over because when they shut it down, copper was $1. And there the cutoff grades would be changed substantially in this environment. And there's also lots of mineralization in the wall rocks, because when you're underground, you're trying to be surgical in your removal of rock, and you do not remove anything below the cutoff grade. And so the wall rock that has less than the cutoff grade, we think that's applicable in an open pit, and that's going to allow us to build tons and grade in our maiden resource report, which is coming out later. So moving on, location and infrastructure. This is located in just near the town of Chapet in Quebec. It's right about 30 kilometers from Chibougamau, which is another copper camp. So there's all sorts of interesting deposits in that area. You can see there's the Robitaille and the Cook mine just extend further to our east. But what this slide is really all about is to show, we're right in the middle of Quebec. We're in the purview of Plan Nord, which is a major government incentive program for projects such as the Opemiska. And it's about showing you where the infrastructure is. There is a road that runs right through it. There's the railway, which is right there. There's power through it, etc. I've already said this, but I emphasize, when you're talking about base metals like copper, infrastructure is key. You cannot fly in, fly out your materials in your ore or your concentrate. So to have this infrastructure baked in will make the CapEx very attractive once an economic ore body is defined here. So that's a huge value add down the road, which all gets baked into the value that I see today. So the reports, I touched on this earlier, but again, these are exploration targets. These are ranges, but 16 to 33 million tons plus 500,000 to 1.4 plus 3 to 11. I'll let you do the math on that, but that gets to be a pretty sizable resource, and one that's with that infrastructure can be quite attractive, and we think could be fast-tracked. So there's not a whole lot of drilling that needs to be done outside of the crown pillar and maybe some wall rock work, but we think we're, overnight we became a pretty serious player in the copper space. And so again, we want to make these RPA reports, who do, by the way, 43-101, that's their bread and butter, but we want to make these reports 43-101 compliant, and it all comes down to the digital database, which is something we are working on as we speak. It's a desktop study, and we've got 2 geologists working on it full time, and this is going to fast track the project itself. So outside of what was done by Falconbridge, the previous, the vendors, in the private Quebec family company, they've done some work on this. As I said, they're a very technically experienced company. They did some drill holes here. You can see this was done in 2010. This is 17% copper plus 1.7 grams gold over 3 meters. That looks pretty like solid metal there. That's a fantastic drill hole. That is still left in the ground. This is part of the Opemiska. There's been, we're going to be releasing some more drill holes. I will say the drill holes that they have done, and there's some pretty spectacular intersections. So there's an awful lot of resource left here that is call it virgin veins. These veins have not been mined in addition to the wall rock mines, in addition to the crown pillar. So this is our version. We've modeled the digital database into Leapfrog, and this is what it looks like. You can see there's many levels. You can see it's relatively close to surface. These are amenable to an open pit. This is the Springer and the Perry. This is one, angle looking northwest. You can see the grades there on the legend, and you can also note there, you can see that there's the area, the surface there is the top black line, and then there's where the mining area started. That top part's called the crown pillar. And the crown pillar is in place in all underground mines, so that obviously the surface does not collapse. It's about 30 to 35 meters, and we know the mineralization runs to surface, but there's been very little drilling because that wasn't where they were focused on at the time. And we know that when you're talking about an open pit, obviously you're going to be mining that thing. So that is going to be the first area of focus for our drill program, is to systematically drill that crown pillar and delineate ounces and tons there, which we don't have a lot of data for, but we can see the veins come to surface. So that's all very positive news. We have put a 3D flyby of a digital database on our website. I won't do that for the purposes of this talk, but I think it's worth looking. It gives you a 3D feel for what these ore bodies are, their thickness, their grades, their orientations, etc. I think it's quite a useful exercise. This slide is just about the data. I think I've talked enough about that. I just emphasize that we are a very data-driven organization. We love data. We think that gives us a competitive edge. The more validated data that we can get our hands on, the better, and I emphasize validated data because, as they say, garbage in, garbage out. So we're doing a very good job of making sure it's all quality data, and that lends itself to what RPA, or any company like RPA will want, is a quality, validated database where they can put a new resource calculation on this and put their stamp on it. So that's what we're working towards, and that's a huge value add, is the data. Reframing the interpretation. So I just want to, I touched upon this off the top, and I said, this is not a discovery play. We're not going out there and drilling a geophysics target. Far from it. As you've heard, this has had lots of drill holes. The discovery has been made. Obviously, some of the ore body has been taken out by Falconbridge, but we think in the environment of where copper is and where copper is going to go, because we're also taking a macro bet on copper, we think there's an awful lot of copper left in the ground and gold left in the ground, and maybe other metals that can be extracted economically. So we are reinterpreting or reframing a situation. Would we be able to do this if these mines were really deep? No, we wouldn't, because obviously how close the mineralization is to surface is key, and that's why this is interesting, because there's plenty of mineralization which can go into an open pit, and then still there's more at depth, and that's where we think we can ramp down as well. So that's what this is. This is not a discovery play or really exploration. This is about reinterpreting a situation that we know a whole lot about. We've got a clear development plan. The first step is data validation. We're going through that. In parallel, we're going to be resampling the core to look for multi-elements, things such as metals such as cobalt, maybe others. From there, we're going right into drilling. Talked about the crown pillar, that 30-35 meter area that needs to be systematically drilled out to define tons and grade within that area. We're going to be looking for expansion drilling. There's definitely some veins that run to surface that have been preliminary drilled, such as that drill hole that I showed you the photograph earlier with a 17% copper. That stuff runs close to surface. That was not in the Falconbridge mine plan, so there is expansion or upside, greenfield, not greenfield, but upside exploration opportunity over and above what we already know about this particular situation. And then we're going to be targeting the well rock mineralization. As I said, this is a vein-hosted type of deposit, so they just would have extracted the vein, but where the contact between the vein and the wall rock, obviously you're not going to get 17%, but you're going to get, we think, mineralization that would be deemed economic in the context of an open pit and at today's prices. So there's not a lot of work been done on that particular area, but that's going to be a focus for us. Since we're going to be mining that, we want to be able to define its resource. And so those are the three really areas of drilling that we're going to be focusing on. At some point, I see number 4 there is as a resource estimate. It'll largely be a business decision at what point we want to put out a resource calculation, whether that's if we do it right after we do the data validation and we come up with a resource, or whether we want to do some drilling and multi-element testings, et cetera, et cetera. It's still too early to decide when we want to do that, but we know we'll be in a situation to do that in the not too distant future. And then from there, after we've defined the geology, and we'll do so within the context of an open pit. So any resource we do come out with, it does not have, call it PEA level economics, we're going to put a conceptual pit on it. So these are going to be resources that we believe we can mine. But then the next step is to actually put economics on that, real cutoff grades, mining costs, et cetera, in the PEA, pre-feasibility, feasibility, et cetera. That's the route that we're going to be going towards. Quebec. Again, I touched on this, but Quebec is arguably the world's best mining jurisdiction for good reason. I emphasize the Plan Nord. Look at projects like Renard, which is Stornoway's project. There was $1 billion financing package put in place. I think about 40% of that was done by the Quebec government. Now, over and above big construction financing originated by the Caisse de Dépôt, for example, there are funds like CEDEX, FTQ, the James Bay Fund. There's a whole bunch of Quebec government mandated funds to invest in Quebec projects. In addition to that, there's a whole lot of retail interest at the Quebec level for Quebec projects. And so we think that's a huge advantage to being in the Quebec area. And then there's also the flow-through system. Flow-through, you have to be careful with flow-through in terms of how you allocate that, and we always are. We're very familiar with how that, call it that plan or the flow-through game works, and we got to be careful about that. But Quebec does offer very good incentives, and the permitting in Quebec is also, it's always a challenge, and you have to be very careful about your permitting. But permitting in Quebec is easy because they've got the populace and the government are quite familiar and pro-mining there. So we're very happy to be in Quebec. Now, why copper? I won't get too much in detail. I'll let you do your own due diligence on copper. But basically, copper is the most versatile metal. I say it's the base metal. It's used in almost everything. Construction is a huge thing. It basically, when it comes to electricity, getting electricity from point A to point B, you need copper. It's very conductive. And its traditional uses are in basically everything. Building. Modern society as we know it can't exist without copper. And as China and the emerging markets continue to grow, copper is gonna increase in its demand. That's the traditional use of copper, and everybody's quite bullish on copper. And it's had a bad couple of years, but I think the supply demand fundamentals are really pointing towards an optimistic scenario going forward. But where we really like copper, where sort of an added benefit will be the call it the electrification, and that includes the electric vehicles. I believe there's 2 or 3 times as much copper in an electric vehicle as there is in an traditional internal combustion engine. So as that market grows extensively, and we expect it to, as will the copper demand. And then there's also the renewable energy infrastructure, and what I mean by there is solar and wind. Renewable energy is almost, in many instances, at cost parity with fossil fuels. So that basically means, in many instances, it's cheaper to have wind or solar than it is burning natural gas or coal, what have you. The economics of those renewables are getting better and better with the increase of battery storage, which has always been the issue. But basically, we think that that market's going to grow substantially. And why that's interesting to copper is because the installation of a solar panel or a wind turbine, first to note is that they are micro installations as opposed to building a gigawatt factory. You build a whole bunch of solar panels or you put up a bunch of wind turbines. And when you do, they're very, very copper heavy. So that's where a huge percentage of copper is going to go to, is both the EVs and renewable energy, as their economics continue to improve, and ultimately, in time, they're going to ultimately replace fossil fuels. That's and I think that's happening sooner than most people realize. It's not tomorrow, but it's certainly market share is growing significantly. In terms of copper supply and demand, just very briefly, the supply, the quality of mines. Chile dominates copper. Codelco, they just recently announced they're spending over $22 billion between now and 2020 just to maintain their copper output. That's not increase their copper output, that's to maintain. So they got to spend an awful lot of money just to sort of, they're running to stand still, if you will. So they've got these old mines that some of them are 70 years old. Chuquicamata, one of the most impressive ore bodies ever discovered, is 70 years old. They're still mining that thing. The grades have been, getting lower and lower. So there's a real supply issue with copper. In addition to that, there certainly haven't been too many, certainly no replacements for Chuquicamata or El Teniente, et cetera, et cetera. Those mines, we just haven't been finding those big monsters. And anything that we have been finding, for example, stuff in the DRC, I'll point to Robert Friedland's projects. Those are, I emphasize, in the DRC, and that presents a whole host of issues that I'll let our audience figure out. But jurisdiction's a big issue. So there are supply issues on the horizon, and as I mentioned in the previous slide, the demand. We think the world, despite these trade issues going on right now, I think it's inevitable that the world is going to continue to grow. More people and more copper on a per person basis is absolutely going to happen. And then you juice up those copper ratios with the EV and renewable technology, which is upon us. It's not coming, it's here, and it's growing quickly. Last, I'll point out that historical copper prices, again, it's about at 280 right now. It's sub 280 as of this morning, and copper prices are low. There's just no question in my mind. Obviously, we don't predict metal prices. We don't know the short term, but in the medium to long term, given the supply-demand fundamentals, we think copper is a great place to be, and Power Ore is now very much exposed to it. So aside from that, that's our team. We've got a fantastic legal, financial, and of course, technical team. Each of whom are willing to answer any questions anybody has on the Opemiska or the MAN or the McMurtry or anything corporately. I make myself available to shareholders. Again, my name is Stephen Stewart. I'm the CEO of Power Ore. We're traded on the Toronto Venture Exchange under the symbol PORE. And feel free to reach me anytime at any of these contacts.